appreciate everybody joining today. We typically hold these on the first Monday of every month. Obviously, with that holiday this weekend, we pushed it back a few days, so appreciate everyone joining us today. I hope you all had a wonderful Labor Day weekend as we now head into fall. And so, Sean, before we kind of jump into our market insight, an update on the economy as we close out third quarter in 2021 and we kind of wrap up this year, wanted to talk about a few things that you may have heard in the month of August specifically, and we touched base on this a little bit last month. It was the eviction moratorium. And so for those of you watching and listening, the eviction moratorium basically protects renters from being evicted during the pandemic. Now, late last month, late August, the Supreme Court ruled in a split decision that the CDC, who actually imposed the moratorium, didn't have legal authority to do so. And so that has now ended. So Sean, tell us kind of what we're monitoring, what that may impact, now that it leaves potentially, hundreds of thousands of people with the potential to be evicted.
Yeah, so it's very interesting. About 1/3 of America is actually renters, and so it affects millions of people. But what we don't know is, are people really unable to pay their rent, or are they just choosing not to? Have they already reached agreements with their landlords? All of these things are unknowns, and so we are going to be monitoring inflation, which we'll talk about a little bit later, but also kind of the impact on the housing market. We've got clients in almost all 50 states, and most people are telling us that, hey, my house is going up in value, right? It's skyrocketing. And so when we see those kinds of things, if we start to see people getting evicted, maybe landlords don't want to go through that process again, maybe they're unable to pay for their home, how does all that impact the housing markets? Will we see a decrease in some of the housing cost growth? Those will all be things that we're monitoring moving forward. Like I said, it's been pretty new. So really, it'll probably play itself out over the next coming months.
Thanks, Sean. And another thing that has been a topic of conversation recently, especially now that fall semesters are starting, if you're a student or you have children and you've looked into student loans, a quick update here, you probably heard some buzz around the administration passing, a $10,000 loan forgiveness, even $50,000 I've seen. And so we can't speculate if those are going to be passed. So I wouldn't necessarily bank on that as you're determining if taking out a student loan is right for you in your financial picture. But what we can say is that what was recently passed was if you are 100% disabled or permanently disabled, or you're in a qualifying industry or occupation, such as teachers that qualify for specific grants, you have the potential to qualify for a student loan. So that's what we can say. Again, what we, during our conversations, we wouldn't necessarily say, take on a student loan because $10,000 of that is going to be forgiven. And so we'll continue to monitor that. If you have questions on either of those topics, things that you're hearing, please reach out to us. We're happy to help. So, Sean, I'll kind of get into your take on how the markets have been performing, our outlook. I know there's been a lot of talk, especially at the end of August, on a meeting in Jackson Hole. The Fed, Jerome Powell was going to give a speech. What's the update on inflation and employment? What are we monitoring? How is that impacting our markets?
Yeah, so the Fed met in August up in Jackson Hole. Wish I could have joined them up there, but things that we're kind of looking at, and some big news that came out recently was the jobs report. So we added about 235,000 jobs based on last week's report, and they were expecting about 720,000 jobs. So we drastically underperformed how many jobs we thought we'd add. And so we kind of saw the markets yesterday and today with that news not doing as well. And so maybe this could be a sign that, there aren't as many people looking for employment. We're not having the growth that we need. Overall, unemployment's at about 5.2%. So it's actually not that high. Although, based on my experience and probably everyone that's listening, we are kind of seeing some of these lack of supply chain things happen. I went to Chick-fil-A and they didn't have bagels. And I said, if Chick-fil-A can't get their logistics problem right, then I don't think anyone can. And the same is true for really about everything. We ordered a couch. They told us 9 months. We have clients that are small business owners are having a hard time finding people to work. Some people that are in construction saying that there's trains just full of goods that are sitting there because no one's there to unload them. And so as we start to see how all this will play out, we're monitoring how is the market performing. Now, the market performing kind of year to date as the end of last week, the S&P 500 is still up over 20%. The NASDAQ's up almost over 19%. So the markets are doing extremely well. And so the question that we keep getting on almost a daily basis when we meet with our clients during our quarterly meetings is, when does this end? Right? Like they all feel like we're just kind of standing here on a house of cards and it could fall at any moment. And the answer is, I have no idea, right? We don't try to predict the future. We try to build a balanced portfolio, and we try to make sure that we are in every asset category. We just had $1 trillion of stimulus passed. We're talking about another $3.5 trillion. All of those things, that additional printing of money, will erode the value of the dollar. It may be a good time to kind of have more positions overseas because it'll take more of our dollars to buy international goods. We're monitoring the inflation report. Inflation in July was at 5.3% year over year over a 12-month rolling calendar. The September inflation report comes out on September 14th, next Tuesday. And so we're excited to kind of see how that goes. Are we seeing that curb? Because last month's inflation report was kind of the slowest growth that we've had in the last 5 months. So we want to find out, is that continue to be the case as we're starting to see less people come from unemployment, as we're starting to see maybe the eviction moratorium affect housing prices? Will we get kind of some lower inflation numbers moving forward, given the fact that kind of some of the reports that are coming out? All that being said, why is the market continue to go up? And I keep telling people, drive around your neighborhood. You're going to see dumpsters in driveways. People are redoing their patios. People are out spending money, buying new cars. And the reason is because small businesses got things like PPP loans. They got all sorts of kind of loaner money from the government. Individuals got advances on their child tax care credits. They got deposits put in their bank accounts. So people are paying off debt and they continue to spend money. About 2/3 of the U.S. economy is consumer spending. So as long as consumers continue to spend, we'll probably continue to see the markets do really well. So all of that is to say, we monitor all these things on a regular basis. We make sure that we've got a diversified portfolio so that we're in all the right asset categories. Things like real estate this year is the best performing asset class. People last year would have thought, no one should be buying real estate. People are never going to go back to work. And we're starting to see that everyone's kind of being forced back into the office, which is a whole nother debate. But those are kind of the things that we're watching right now, things that are happening in the economy. And the best thing that you can do is make sure in your portfolio that matches your comfort for risk, that you have diversified asset classes across the globe so that you can be in the right portfolio for you and your goals.
Thanks, Sean. And I know some heads were maybe wheels were spinning when you say that the employment rate didn't really meet expectations this past month. And some people, we've been hearing a lot about the Delta variant. Is the economy going to shut down? Are there going to be more restrictions put on us with all those vaccinations and everything? So I know there's some people out there probably thinking, oh my gosh, are we going to go through this again? We just went through this last year. Some of the results of that we heard about is people saying, oh, I need to hold on to more cash. I need to stop investing in my 401k. So Sean, what would you say to those people that may have some fear in terms of, is the Delta variant going to happen again?
Yeah. So kind of what we continue to say is you've got to get money in the market. And the reason is because we're going to hear all this scary stuff in the news, the Delta variant, the unemployment rate, inflation. But when we look at the data, the markets are up over 20% here to date. And so if we continue to, kind of give into this fear mongering that we see on the media on this 24/7 news cycle, we may make some of those decisions and hold on to cash. But the reality is inflation's real. We don't want our dollars sitting in the bank earning 0.5% or 1%. You've got to get money invested in the market. And you need to be in a portfolio that's going to grow so that if we do continue to see more growth in the market because consumers continue to spend, we could see this for another couple of years. There's nothing saying that the market needs to correct. Could we see a correction? Absolutely. But the best thing to do long term is get your money in the market. If it's going to be cash, make sure it's very conservative so that you're outpacing inflation and you're not putting those dollars at a lot of risk. But that's kind of the goal, is to make sure you get your cash working for you.
I appreciate it, Sean. That's all the questions and topics we've kind of heard from the last month. We will look forward to seeing you next month, October 4th. We'll be having another monthly market insight. So send in your questions and we'll kind of prep you as we get into fourth quarter as we round out this year.